100 Baggers, The Art of the 100-Fold Return. Introduction: The Fortune in the Attic. Imagine you found an old dusty envelope in your attic. Inside is a single stock certificate for $10,000, purchased 20 years ago in a company you vaguely remember. You pull up your phone, check the ticker symbol, and your heart stops. That $10,000 isn't $10,000 anymore. It isn't $50,000. It's $1 million. This isn't a fairy tale. It's the reality of the 100 Bagger, a stock that returns $100 for every $1 invested. Today, we are breaking down a cult classic in the investing world, 100 Baggers, Stocks That Return 100 to 1 and How to Find Them, by Christopher Mayer. Mayer didn't just write a book about theory, he studied the actual data of every stock that returned 100 to 1 between 1962 and 2014. He looked at the DNA of companies like Monster Beverage, Amazon, and Electronic Arts to see what they had in common before they became giants. If you've ever felt like you're late to the party or that the big money is only for Wall Street insiders, stay tuned. We are about to decode the roadmap to the most elusive prize in the stock market. Chapter 1. The Math of the Hunt. Before we talk about companies, we have to talk about time. Most investors think in quarters or years. 100 Bagger investors think in decades. To get a 100 to 1 return, your investment has to grow at a certain percentage for a certain amount of time. Mayer gives us a simple cheat sheet based on the rule of 72. At a 20% annual return, it takes about 25 years to hit a 100 Bagger. At a 25% annual return, it takes about 20 years. If you find a rocket ship returning 33% a year, you hit the mark in just 15 years. The dilemma for most people isn't finding the stock, it's the coffee can approach. In the old days, people would put their most valuable possessions in a coffee can and hide it under the bed. They didn't touch it. To get a 100 Bagger, you have to be able to watch your stock go up 10x and then still not sell it. You have to endure the boredom of the middle years and the terror of the market crashes. Chapter 2. The DNA of a 100 Bagger, the SQGLP formula. Christopher Mayer identifies a specific DNA shared by these monster stocks. He uses the acronym SQGLP. Let's break it down, because this is the filter you need to apply to every stock in your portfolio. S. Size is small. You cannot turn a $2 trillion company into a $200 trillion company. There isn't enough money in the world. To find a 100 Bagger, you must start small. Most of the stocks Mayer studied started with a market cap of under $500 million. You're looking for the mighty oak while it is still an acorn. Q. Quality of management. Small companies are fragile. They need a visionary at the helm. Mayer looks for owner-operators, CEOs who own a massive chunk of the company themselves. When the CEO's net worth is tied to the stock price, they don't make short-term decisions to please analysts. They make long-term decisions to build wealth. Growth in earnings. A stock price is a slave to earnings. If the earnings don't grow, the stock eventually dies. But 100 Baggers don't just grow, they compound. You're looking for companies that can reinvest their profits back into the business at high rates of return. This is the internal compounding machine. Longevity, the moat. To survive for the 20 years required to hit a 100 to 1 return, a company needs a moat. This is a competitive advantage that stops others from stealing their profits. It could be a brand like Coca-Cola, a network effect like Facebook, or being the lowest cost producer like Walmart. Without a moat, the competition will eat your 100 Bagger before it reaches year 5. Price, the entry point. You want to buy these companies at a reasonable price. You don't necessarily need a bargain bin price, but you can't overpay. The real magic happens when you get double compounding. This is when the company's earnings grow and the market decides the company is worth a higher multiple, PE ratio. Chapter 3. The Monster Beverage Story. Let's look at a real-world example from the book, Monster Beverage, formerly Hansen Natural. In the mid-90s, this was a tiny juice company. It was insignificant. But then they pivoted to energy drinks. They had high gross margins, a tiny market cap, and a product people were literally addicted to. If you had invested $10,000 in Monster in the early 2000s, by 2016 you would have had over $6 million. But here is the catch, and this is what Mayer emphasizes. To get that return, you would have had to sit through several drops where the stock lost 50% of its value in a single year. Most people sell when they see a 50% loss. The 100 Bagger investor sees it as a discount on a masterpiece. Chapter 4. The Enemies of the 100 Bagger. Why doesn't everyone have a 100 Bagger? Mayer points out 3 main enemies: taxes and commissions. Every time you sell a stock to take profits, the government takes a cut. That is money that is no longer compounding for you. The 100-bagger strategy is the most tax-efficient strategy in the world because you never sell. The action bias. We feel like we are working when we are trading. We check the news, we read the charts, we click sell and buy. Mayer argues that in investing, you are paid for your waiting, not your working. Media noise. The financial news cycle is designed to make you panic or get greedy. It focuses on the next 24 hours. A 100-bagger is built over 24 years. You have to learn to tune out the noise of the macroeconomy. Chapter 5. How to build your own coffee can portfolio. Mayer suggests a simple but difficult strategy. First, do deep research. Find 10 to 15 companies that fit the SQGLP criteria. Look for high returns on invested capital, ROIC. This is the engine of the company. If a company can take $1 and turn it into $1.20 year after year, it's a winner. Second, buy them. Third, forget you own them. He tells the story of an investor named Robert Kirby, who helped a client manage her husband's portfolio. When the husband passed away, Kirby looked at the husband's private secret portfolio. He found that the husband had been copying Kirby's buy recommendations but ignoring his sell recommendations. The result? The husband's portfolio, full of stocks he just held forever, was worth significantly more than the professionally managed portfolio where Kirby was constantly trading. Chapter 6. The Essential Moats. To find your 100-bagger, you need to be a moat hunter. Mayer lists the 4 most powerful moats. High switching costs. Think of a company like Bloomberg or Oracle. Once a business uses their software, it is too painful and expensive to switch to a competitor. They are locked in. Network effects. A service that becomes more valuable as more people use it. Think of eBay or American Express. Intangible assets. This includes patents, government licenses, and brand names. If people ask for a Coke instead of a cola, that's a moat. Cost advantage. Being able to provide a service cheaper than anyone else through better process or scale. When you find a small company with a widening moat and an owner-operator CEO, you have found a potential 100-bagger. Chapter 7. The Psychology of the Hold. This is perhaps the most important part of Mayer's book. He quotes Charlie Munger, "The big money is not in the buying and the selling, but in the waiting." You will experience the great boring. There will be years where your stock does nothing. There will be years where your friends are making money on hot crypto coins or AI startups while your solid compounder sits still. You have to be right and sit tight. Mayer reminds us that 100-baggers often look expensive on a PE races. Amazon looked expensive for 20 years, but because their growth was so explosive, the expensive price of yesterday was actually a bargain for the reality of tomorrow. Summary: the checklist for your next investment. Before we wrap up, let's look at the 100-bagger checklist one more time. Is the market cap small, ideally under $1 billion? Is the CEO and owner, skin in the game? Is the return on invested capital high, over 15 to 20%? Does the company have a reinvestment moat? Can they keep spending money to grow? Can you leave it alone for 10 years? If the answer to these is yes, you might just be holding a ticket to a 100-to-1 return. Conclusion: the long game. Christopher Mayer's 100-baggers isn't just a book about stocks. It's a book about character. It's about the discipline to resist the urge to be clever and the patience to let time do the heavy lifting for you. The road to a 100-fold return is paved with volatility, boredom, and doubt. But for those who can identify quality and hold on through the storms, the rewards are life-changing. Remember, you don't need to find 50 of these. You only need to find one in your lifetime to completely change your financial destiny. Thank you for joining us for this deep dive into the world of exponential returns. Finding a 100-bagger starts with the right mindset, and we hope this summary has helped sharpen yours. If you like content like this, deep dives into the books that can change your life and your bank account, please like and subscribe to the channel. It helps us grow and keep bringing these insights to you. Thank you for listening, and happy hunting.